What's up, everyone? All right, so here we are, 5th day of April in terms of 5th trading day, and today is my 5th consecutive green day, trading AKER as it was squeezing up out of the gates. This is a stock that on Friday was priced at $2, and today it hit a high of just under $9. Absolutely incredible momentum, really nice opportunities, and I traded that on the move up, and then I took my profit off the table and said I'm done for the day. At 11 a.m., they put out the news, secondary offering, price is $6, and it dropped from about $7.50 or whatever it was at, right back down. And this is the thing that's so tough, especially in this market. We've seen a lot of secondary offerings. We've seen a number of them announced during the day. And you just have to remember that the longer you stay in the market, the more you're exposing yourself to the risk of being in a stock that all of a sudden has breaking news. You know, it unfortunately, as much as we'd love to be able to say that every time we trade, our stop is, a 10-cent stop and this and that, but there's always that risk of a stock or a company putting out news in the middle of the day. And so I try to trade for very short intervals of time. I don't want to overstay my welcome. I want to get in, take my profit, and get out. And today, I did exactly that. So walking away, 5th consecutive green day with some nice profit. Right down in the description, there will be a link for you guys who are at the very beginning of your learning curve to download my Beginners Getting Started Guide. I encourage you to do that if you haven't already. And there's some other links in the description on brokers for trading with small accounts, like $500, the platform I use, the charting, how I manage my risk, my audited profits from the last few years, all of that stuff. I'm sure will be interesting to those of you guys who are just getting started. So anyways, I'm feeling good here, not overstaying my welcome, taking the profit off the table, live to trade another day. I'll be back at it first thing tomorrow morning for hopefully my 6th consecutive green day. All right, I'll see you guys then. All right, everyone, so we're going to do midday market recap here, go over the trades from this morning. Today is going to be I'm almost positive, 5th consecutive green day. The stocks I've traded, AKER, which is definitely the one that I'm green on, YGYI, which is a loser, and DPW, which was also a loser. So green on only one out of the 3 stocks I traded. That's not ideal, but AKER gave us some really nice opportunities. As you can see right now, it's up 58%, and this is the one that we were trading yesterday down at about $3. So a big move from $2 on Friday all the way up to a high of $8.85. Today, I am up $2,155 on AKER, which is great, but red on these two, up about $1,100 on the day, $1,200. So a green day, not the biggest green day in the world, but this is kind of where I've been averaging the last 4 or 5 days, trading with smaller share size. No doubt, trading with bigger share size has the potential to give some bigger green days, but it also has the potential to give some pretty big red days, and that's not something that I'm really interested in having right now. So I'm actually, while we do this recap, I'm going to go and import my trades from yesterday so we can see how my metrics are looking here after another day of trading. I did take a number of trades on AKER. It wasn't just one trade, so we'll look at the 1-minute chart. My first trade on this actually was right out of the gates for a break of this pre-market pivot of 640. We broke 640 and popped up to 660, and so just like that, I already had my first win within the first minute of the day. It pulled back, I added for the break of 660, and it squeezed up to 680. And so within the first 2 or 3 trades, I was in really good shape, and we got this nice break of 7, a little pullback here, break of 715, a rip up to the high of 775, and then a 5-minute long circuit breaker halt. So that circuit breaker halt was a nice one, but coming out of it, it popped up to a high of 795, and I actually a little aggressively added right around 7.85 for the break over $8. It then flashed down here to 6.98. And so for a second, it actually looked like it was going to halt going down, and I was down 80 cents a share. And that's never a really fun position to be in. It's part of the risk with trading these types of stocks, whether you're long or short. That you can see these types of big whips, and if you have one going the wrong way, it can obviously be a good sized loss. It's almost impossible to 100% avoid it. It just happens from time to time. But on this one, and generally my feeling on these is that as long as the move is not caused by news that just came out, if news just came out of like a secondary offering or something like that, it drops and halts going down, okay, that's the catalyst. It's not a good headline, and I'm probably going to just bail out. If it actually halts going down and I'm holding full size, it's pretty much always going to be a bad situation. However, what I often will try to do is have the presence of mind not to be in with full size, so that on one of these dips I can actually add and then bring my average back down and ride the momentum back up. And that's what I ended up doing on this, and it ended up working pretty well. I wasn't in with full size. It dipped down. I didn't add at the very bottom. I was tempted to, but I thought it might halt going down, so I didn't. It then popped up, and as it curled back up, I added, bring my cost basis down a little bit, and then we got this squeeze up to 8.44 and into a second halt going up, which was kind of just wild. I mean, to have that kind of action was unexpected. Just the false halt going down, the pop back up, just crazy stuff. So anyways, that one was not the absolute easiest, but we got a couple nice trades on it. So $2,100 of profit. The other one that I traded, YGYI, this is a cheaper stock, and you can see that it actually made a pretty big move here. I got in for the break of $1.75, and it popped up here to $1.91. It looked like it was going to halt, and then all of a sudden it came back down really fast. Like someone did a market order for, I don't know, 100,000 shares. It just dropped right back down, and I stopped out just below break even. DPW is the one that I'm the most red on. This one's annoying because I was watching it right here for the break over 50, and I was like, oh, I don't know if it's really worth it. Or was it the break? No, sorry, it was the break over 58, which was anticipating the break over the pre-market high. It broke 58 and ripped up to 79, a 20-cent breakout. And then I bought as it was doing this pullback right here, and I stopped out down here. So, I took my full 6,000 shares on this one, being a cheaper stock. I thought that made sense, but then I just, all of a sudden, it was down 10 cents and then 15, and I was like, wow, all right, well, it is what it is. So at that point, I felt like probably good time to scale back. That was around 10 past 10. And then we had, let's see, where was YGYI? The last trade on YGYI, on AKER was, I think was it around here? Now I'm trying to remember. I think I had one last trade somewhere in here, but in any case, yeah, so finishing the day up $1,100. The focus right now, if I can make $1,000 in 1 hour, trading with small share size, it's obviously, it's great for consistency. It's not the glory that comes with hitting $8,000, $10,000, $20,000 winners, but I also don't have to deal with the higher levels of emotion that come with having red days of that size. Because the red days down 6,000, 11,000, 12,000, those become commonplace when you're trading with 10,000, 20,000 shares. It's just part of the deal. And so one of the things that stops a lot of traders from scaling up is that, they just feel like, man, I can't handle the sort of the ups and downs of it's like the emotional is too much. I need to ease off. So for me, I think March was a great example of a month where the market was insane and traders probably around the world were just dealing with heightened emotions just from having our 401ks drop by 35% and just feeling the stress of everything that was moving every single day and everything else. So I found myself trading like really aggressively at times in March, and it wasn't, I was just at the end of each day, I had a headache and I was stressed, and the red days I was getting super, super frustrated with myself. And I said, you know what, let's just bring it down for April. Let's focus on better quality setups. Focus number one on trying to be a really good teacher for those of you guys that are at the beginning of your learning curve and trading through a pretty unprecedented world event. And so here we are, 5 days into April, 5 green days in a row, about $7,000 of total profit, 80% accuracy. 80% accuracy, and my profit loss ratio, average winners are $248, average losers are $120. Now, unfortunately today, I'm gonna have my biggest loser on DPW, so that's not gonna help my average losers. It's not gonna help my profit to loss ratio, unfortunately. But my accuracy will still be pretty good today because I had a lot of trades on AKER and almost all of them were green trades. So, we'll see where all this lands by the end of the month in terms of my accuracy and profit loss ratio, but I'm striving to maintain a 2-to-1 profit to loss ratio while at the same time having accuracy above 70%. And that's a challenge because, it's easy is maybe, it's relatively easy. Trading is hard, we all know that, but it's relatively easy to have high accuracy. And the reason is it's not hard to predict when you're looking at these types of patterns, flat top breakout, first candle to make a new high, things like that. As long as, once you've gotten good at recognizing these patterns, it's not hard to predict that this is a spot where the stock will probably break out by anywhere from 5 to 10 cents. So if you take the profit every time you're up 5 cents, then your accuracy is going to be high because it's not hard to predict a 5-cent move. But your profits are going to be small, right? And then occasionally when you get that loser that's minus 20 cents or whatever, then you've got negative profit loss ratio despite having great accuracy. You can still make money that way, but you sort of sacrifice the profit loss ratio in exchange for high accuracy. Because when instead you're saying, well, I'm not going to take profit unless I'm up 20 cents, there are going to be times where you're up 5 cents or 8 cents or 10 cents. You don't take any of it off the table. It would have been a winner, but then it turns into a loser. So it hurts your accuracy, but your profit loss ratio is maintained. So, out of curiosity, what do you guys think is the better approach? An accuracy focus or a profit loss ratio focus? Not that it has to be one or the other, but you kind of have to start somewhere. So Chris says accuracy without question. Accuracy, 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 accuracy. But a few of you are saying P&L. I've gone back and forth. I don't have a really hard set of which is right because on the one hand, I feel like if you focus as a beginner trader on profit loss ratio, keeping really tight stops, always asking yourself, do I have a 2-to-1 profit loss ratio potential on this trade? Then you're making it so you can be profitable even if you're right only 50% of the time. So you can't throw profit loss ratio out the window entirely. On the other hand, as a beginner trader, and I guess on that same note, as a beginner trader, expecting 70 or 80% accuracy is not realistic. So given that just probably fact, profit loss ratio is a good place to start, knowing that accuracy will improve over time. However, being right 50, 60, 70, 80% of the time, the more often you're right, the stronger you develop this sense of confidence in yourself, in the strategy that you're trading. And that's an important component to being successful because that gets into the mindset of being a successful trader. So I think that generally the approach of I want to focus on the best quality setups, therefore my accuracy will be really high, is important. And taking half of the profit off the table quickly and then adjusting your stop to break even on the rest. I think that that's a good approach. And it does mean that for a 2,000 share position, if you're taking your profit off only up 8 or 10 or 12 cents, it might only be, a small amount of money, and then you hold the rest with a stop at break even. But at the same time, it's important to start to build that consistency track record of locking up profits and having accuracy grow. If you have a trade like the one that I had on AKER where, in one candle, and we could go down to the 10-second chart just to show you, in one candle it all of a sudden drops $1 a share, most likely you would be holding full size. You wouldn't have had a chance to bail out, and then all of a sudden it's like, wow, okay, how's this work? My average winners have been 10, 15 cents a share, and now I'm holding something down $1 a share. I almost always set my stop at the low of the pullback. So I let it pull back, I let it drop, and I set my stop at the low. That was about $7. Off of that level, it started grinding back up. And so, I was like, in that particular case, I guess I dodged a little bit of a bullet. However, I would say that this entry here was particularly aggressive, probably out of all of the trades I took today. This was a stock that was moving quickly, no doubt about it. But this entry was a little riskier. So when you're focusing on your entries, asking yourself, is this right now a 1-minute pattern? Is it a 5-minute pattern? Is it both? If it's neither, then this might be a setup that is for the students and traders who've been doing this maybe a little longer than me. And one of the reasons that I have taken the 10-second chart off of my e-signal here was that I started to feel like it was encouraging me to overtrade and to be just overly aggressive and start seeing things that probably most people wouldn't see. And so I was like, you know what, let's just pull this off for April and see if that helps slow me down a little bit and focus more on the stronger setups. And we had some really good 1-minute setups on AKER, like this break here of 717, the first candle to make a new high, break of 717, that led into this halt. So we could have been just taking profit. I decided to be a little aggressive and try to add coming out of the halt, and that was pushing my luck for sure. So in this case, it ended up not turning into a loss. I mean, it came back up, but it could have turned into a loss, and it would have been probably one that I would have been a little frustrated at myself with because I was being conservative most of the morning, and then on that trade, I took a little too much risk buying near the high. I think I bought 1,500 shares, and then I added another 1,500. So, it was a little bit of a riskier position there. But anyways, so I'm happy to finish up the 5th green day. Those of you guys who are new students, reminder, today at 3 p.m. I'm going to host the Tuesday Warrior Pro Mentor session. So that'll be in the Warrior Pro chat room. Those of you guys who have questions as you're getting started, we'll have a nice long session there so we can get those all answered. I encourage you guys to actively trade in the simulator, through the morning and even early afternoon if you have the availability, just because it's good. It's good practice. AKER yesterday definitely gave some nice mid-morning, late-morning opportunities. When you're trading with real money, though, it's important to know when to walk away. So today, I obviously would have been up closer to, 2,000 before I gave back a little bit of profit. I didn't know exactly how much I gave back, but I definitely gave some back. So you want to make sure you're walking away before you've given back too much of the gains when you're trading with real money. But as a sim trader, gaining experience is super important. So the more time you can spend, in the chair in front of the computer, really, in a lot of ways, the better. Okay, so that's it for me. I will see you guys 3 p.m. Warrior Pro students, and everyone else will see you first thing tomorrow morning.
Hey,
Hey, have you seen my most popular video on YouTube? It's got over 5 million views. You can check it out right here and check out one of my other videos on YouTube right here. I hope you guys enjoy, and as always, if you have questions, leave them down below in the comments section. I personally respond to every comment that's posted.